What's going on YouTube? It's Sank. We're back with another one. Alright guys, that kicks off a brand new week in these markets. And I hope you've all had a good weekend and you're looking forward to getting stuck into the markets, because with a new week brings new opportunities for us to establish some great moves. And we are looking to continue that momentum we've had in August, bring it right through into September. So if you're new, make sure you're joining the movement. Now as I say, it's a new week, it's Monday, so seeing you right in this drop, I come packing the heat. So I want to run by you a few plays that are set to detonate, and I want to show you how we play them. But before I go ahead and dive into our first play of the evening, I want to regroup with you on a play that I put you guys in a couple of weeks back. So we have ticker symbol BGFV, that's Big 5 Sporting Goods. This is a play I put you in sometime back in July, and on the day they're up closed out almost 20%. Now I just got done speaking to the team over the Discord about this one, ensuring they're locking in the right levels of profit and maximizing their returns in the play, because tons of them have made some good money on this one. So make sure you guys hit that top link in the description to join our Discord, tap into all the resources available to you to set yourself up for success in these markets. I look forward to seeing you over there. Now today we saw a lot of movement in these short squeeze style plays, and yes, BGFV have about a third of their float short, but that's not even the reason why I got you into the play. The reason why I got you into them is because they're actually an undervalued business, good fundamentals. They've come out with several strong consecutive quarters of earnings, beating estimates, increasing their dividends, and that short squeeze piece on them, that's just an icing on the cake. So as a given, the market was always going to push this one up, either based on the fundamentals or more on the short squeeze side of things. Now today's movement is probably more based on the latter, given the interest in short squeeze plays that we have seen today. Now this isn't a buy signal from me to you on this play. I'm just giving them some airtime, giving them a few minutes of fame on the channel. So actually at this junction, you guys want to be considering taking some profits. So we have ticker symbol ZIM, that's Zim Integrated Shipping Services. Now over the last couple of days, there hasn't been too much price action with our play. They've pretty much just been trading sideways, closing out the day at $48. I want you guys to check this out, because this is what really matters. So right now, there are a record number of ships, that's 44, waiting to dock up and offload at two of California's largest ports that account for about a third of the total US importing volume. So this is a big deal for the play, because what it shows you guys is the extent of the supply chain disruption, and as long as these remain, that means the prices are going to remain high to move freight around the world. Benefiting our play just means they're going to continue to pump out amazing numbers, post up phenomenal quarters, and the street will play catch up by pushing that stock price up. It's only a matter of time. Now what I'm seeing more of is experts within the shipping industry coming out and extending the timeline they think we're going to get back to normality. Okay, so I'm seeing a lot of them saying it's going to be H2 2022 that will see normality in the shipping industry. Some of them even saying 2023. Okay, so again, this is a big deal for the play. It just means there's that extended runway for them to continue excelling from a financial point of view. And as I say, stock price will play catch up, and we will see that move up, okay, only a matter of time. Now what we are looking for is looking for them to break through that $50 resistance mark, okay? So once they can close out a day at $51 or $52, breaking through that 52-week high and breaking through that psychological barrier, okay, it'll be onwards and upwards for the play, just like we saw when Danaos broke through their 52-week high. We saw them shoot up into the mid-80s, all right? So tons of upside on this one. Now, entry at this type of level, I'm happy for you guys to continue to accumulate and build your positions here. The next one I've got for that's ticker symbol SPG. We have Simon Property Group coming in at $133. This is a play the market is overlooking right now. They've already come out of an explosive quarter, set good guidance for the next one, and as a malt operator, they're going to continue to benefit from reopening and the winding down of cases. Now, if you check out the price action over the last 3 months, this one is in full consolidation mode, i.e. trading sideways. You guys already know I love catching these plays here where the market is overlooking them, plays are trading sideways, so no amount of time before they break that pattern and then move to the upside. Now right now we want to see them break the $135 mark, and once they do, it should be easy for them to get to the 140. Right, so they've got that resistance 135. We're on the lookout for them to break that. So if you catch them under that mark, they're good to go. Next up, we have Caesars Entertainment, ticker symbol CZR. Now this is a play that we were buying as this one was dipping from the 90s to the 80s. Then we seen it spike up to the hundreds, and on the day they had a little bit of a 2% call off, standing $102. If we can catch this one under $100, it's time to start accumulating again, because there's a big upside in the play. I'm expecting this one to close out the year at that $130 mark, so that's still a good 30% upside from these types of levels, and they can close up even higher than that, because not only do they have their casinos which are performing very well, and again, as you go through reopening, travel bans lifted, it's going to play into their favor with higher footfall and even stronger numbers than they are posting up, taking advantage of the record numbers of gambling spending that we are seeing right now. But they've also got their online piece as well. They got their sportsbook that's launched in Arizona, and they're going to continue to roll that out in different states. Again, just adds a whole new dynamic to the business, gives them a long runway of continued growth, much beyond even this year. So this is one that you guys want to ensure that you get your position, build out your position in any extended weakness that you find. So if we catch this one under $100, as I say, catch them the 98s, the 97s, as we continue through the week, we start building and accumulating our position in this play again. So if you've been rocking with the channel, you know what time it is. SBLK, that star bulk, looks to be on the rise at the moment. What's a good entry price for this one? So this is a great one to share, because you're going to find yourself in this position time and time again when you have a play you like and you don't have to approach it as far as entry goes. It might be hovering around those 52-week high levels, so you might be holding off, waiting for that pullback, or on the reverse, it might be dipping down, you might be holding off, waiting for further dips. So how do you approach it? Now with Starbulk, it's hovering around the 52-week high level, but when you guys know, they've got very good valuation, strong tailwinds from the industry, and in the backdrop, got commodity prices looking strong. So that's a play that deserves to be at those types of levels. As a matter of fact, they deserve to be even higher. That's why this is one of our plays, one of our winning plays. Now, how do you approach it? You want to buy in tranches, okay? So they're good to go at the level they're at right now, in that $23 zone, given got that $30 price target, so the tons of upside from its current levels. But we buy in tranches because any play can experience short-term volatility. So if the play is to come down to the $22, the $21 mark, again, you can buy in, utilize your second chance, get your cost basis down, and just prepare yourself to build out a bigger position. Now with these strong momentum types of plays, that's the way to attack them, because if you're then holding off, waiting for that big pullback, what could happen is the play could tick upwards, could go from the $23 mark to the $25 to the $26. Again, you're holding off, they might go to the $27 mark, and then at that point in time, you're going to feel that FOMO, you're going to jump in at a much higher price than if you just originally got in with that first tranche at that $23 mark. All right, so that's the best strategy to approach a quality momentum play. Alright guys, that wraps up for this, and if you've got any questions for me, drop them down below and I'll get back to you. I want to say I appreciate you guys on your way out. Make sure you guys like that comment section for me. If you're new, join the movement, and I'll catch you on the next one.